for joining us both online and live on NTV Uganda for this year's Fintech Symposium. My name is John Dabarasa. I work with the International Trade Center. ITC is a joint agency of the United Nations and the World Trade Organization. And the work that we do is to support small and medium enterprises across emerging markets to participate in profitable trade. In Uganda, we're offering this support through the Netherlands Trust Fund project, which is based on a partnership agreement between ITC and the Center for Promotion of Imports from Developing Countries, which is CBI, that is closely affiliated to the Ministry of Foreign Affairs of the Netherlands. We're here today to discuss the National Systems Payment Act. And we're very delighted to have all the key stakeholders joining us online, mainly virtually. And we will be discussing many things around the impact that the Act is going to have on the ecosystem, on the fintech ecosystem, from the entrepreneurs to the regulators and to the consumers of these products and services by the fintechs. So without further ado, please allow me to invite and introduce Mr. Peter Kawumi, who is the Country General Manager at InterSwitch Uganda and is also the chairman of FITSPA Uganda, to give his opening remarks and later on invite our different speakers.
Thank you, John. I'll seek your permission and just take off my mask so you can hear me. Very good morning to you all. We're really excited to be here, and thank you all for tuning in, to our viewers and listeners, and for all that are in the room, thank you for making the time to join us. We specifically say a huge thank you to the representatives from Bank of Uganda, led by the Director, National Payment Systems. We say a huge thank you to the representatives from the Ministry of Finance. Mr. Isabiri and your team, thank you so much for coming. To the Uganda Bankers Association, thank you very much for partnering with us and walking this journey with us. Mr. Wilbur DeWar, thank you for making the time. To the board members of FITSPA, thank you for your support. To our partners, Financial Sector Deepening Uganda, the United Nations Capital Development Fund, ITC, Bowmans, we thank you. And to our industry partners, Stanbic, MTN Uganda, Pegasus, etc., we thank you very much for making the time. As you've heard, my name is Peter Kawumi. I am the Country General Manager for InterSwitch here in Uganda, and also currently serve as the chair of the Financial Technology Service Providers Association, FITSPA, who are hosting you here today. FITSPA is an independent, non-profit, membership-based association supporting Uganda's fintech community. And I'll explain what fintech is in a few minutes. Founded nearly 3 years ago, and with support from FSD Uganda, the association aims to create a conducive environment to stimulate innovation in the financial services sector. We also work to increase access to affordable financial services through ICT and the promotion of financial inclusion in a sustainable manner. FITSPA's operations are centered on 3 core pillars. The first is community. We bring together the diverse parts of the fintech community to encourage open dialogue, collaboration, and co-creation. And you'll hear about some of the things that we've been doing over the last few years here today. The second is innovation. We learn from one another to address pain points faced by the African communities, specifically the Ugandan community in which we operate. The third, and the topic for today, is advocacy. we create a unified voice for the Ugandan fintech ecosystem to encourage varied stakeholders to engage on policy, regulation, and other issues. I am happy to say that these values are resonating very well with the different industry actors in Uganda. We now have over 100 members who, between them, facilitate over 3.5 million transactions daily. We have strong formal relationships with all the financial services regulators in Uganda and are having meaningful conversations with traditional financial services providers like banks, like the telcos, about collaboration and partnership opportunities. It's a very exciting time to be in the fintech industry, as it is now shaping our daily lives. For example, when you transfer money from the bank to your mobile money wallet, you are using fintech services. When you use your bank's debit card to pay in a restaurant or in a hospital, again, you're using fintech services. When you access money from your bank account at another bank's ATM, you're using fintech services. When you pay for your boda using your mobile phone, fintech services. When you receive money from your cousin in Dubai or in Nairobi directly into your bank account or your mobile money wallet, again, fintech services. And when your small business accepts payments via mobile money or cards, again, you're using fintech services. By leveraging technology, fintechs are simplifying the delivery of payments, collections, lending, savings, wealth management, and insurance across several sectors in the economy, like transport, health, tourism, education, agriculture, and others. Fintechs have taken the financial services sector by storm and are already playing a key part in the delivery of these services to millions of Ugandans and Africans. Thus, fintechs have the potential to accelerate the achievement of our government and Bank of Uganda's congruent objective of greater financial inclusion. This potential to reach consumers at scale and accelerate the inclusion of more people under the financial services umbrella has resulted in the rapid growth of our industry. This promises even greater contribution to the growth of Africa's economy through job creation, increased investment, improved productivity, and others. However, without adequate regulation and supervision, the rapid growth and sector interest introduces various potential risks to the financial services sector as a whole. For example, there are risks of money laundering if players in this sector engage in poor know-your-customer controls. There are risks of data breaches due to inadequate security measures. There are also risks of loss of consumer trust due to poor practices like pricing non-transparency. And some of you may have heard the recent comments by the governor of the Central Bank of Kenya about what's going on in that market. To minimize these risks, financial services regulators across the world are responding in varied ways, including the introduction of fintech liaison officers at the central banks, the implementation of regulatory sandboxes, and the enacting of enabling regulation like the Payment Systems Law that we're here to discuss today. Fintech players vary widely in size, from multinational billion-dollar companies, and we've recently heard about the Googles and Facebook and WeChat, etc., who are entering the financial sector. However, there are also 2- and 3-person teams working in university dorms. Most fintechs in Uganda are small and nimble companies that are in the latter startup phase. So they're more the smaller companies. As such, they're mostly ill-equipped for the increased compliance and responsibilities coming their way as they get regulated due to a lack of capacity, capability, or experience. To help improve their readiness, FITSPA has engaged in 3 distinct initiatives over the last few months. Firstly, and working closely with Financial Sector Deepening Uganda, FITSPA has developed a members' code of conduct aimed at providing a pathway towards self-regulation. This code of conduct has been well received, and members are currently seeking compliance accreditation through the association's self-reporting mechanisms. We expect that the first few members will be accredited by the end of March next year. Secondly, FITSPA is collaborating with the Uganda Institute for Banking and Financial Services to roll out a syndicated training program for fintechs and banks, allowing the cross-pollination of ideas and expertise. For example, banks can teach us a lot about compliance, and we can teach banks a lot about how to use data to improve product development. The MOU for this engagement was signed last week, and we're excited to see this roll out. Thirdly, FITSPA has engaged both the Bank of Uganda and the Parliament several times as the National Payment Systems Bill was being drafted and discussed. We were excited when the bill was passed and later assented to by His Excellency at the end of July. Indeed, we have already shared preliminary thoughts on what we think the regulations should look like with the Bank of Uganda. Today, we continue this engagement and are excited to be hosting this discussion on the implications of this new regulation on the sector in the immediate and in the medium term. We thank our partners, UNCDF, the Netherlands Trust Fund Project, Stanbic Bank Uganda, and MTN for making today possible. Of course, we also thank NTV Uganda for providing this platform. Ladies and gentlemen, we are taking steps in the right direction, and I hope we can draw practical and viable lessons to shape the fintech sector in Uganda. We thank you so much for joining us, and we hope you will learn from and give feedback on the subsequent discussions. We've got an interesting structure of discussions for you today. We'll start with a brief presentation on the state of the fintech industry and what regulation enables for the sector. We'll then have a panel discussion that will discuss how enabling regulation can accelerate the evolution of the entire financial services sector. And then we'll close with another discussion on whether partnerships between banks and telcos and fintechs can deliver on the financial inclusion promise that we all seek. So, without further ado, I will now invite the Executive Director, Financial Sector Deepening, to give her remarks and give a presentation. Thank you very much for listening.
Thank you very much, Peter. Good morning, everyone. And if you're watching or viewing and listening through your various electronic devices, good morning to you too. As Peter introduced me, my name is Rashmi Pillai. I'm the Executive Director of Financial Sector Deepening Uganda. As one of the founding development partners of FITSPA, we are very proud to see how the organization has grown by leaps and bounds. So a round of applause to everybody who made this possible. We're also grateful to see our partners at the Central Bank, the Ministry of Finance, and the Uganda Bankers Association here. We're also very excited to see a mix of very different kinds of financial institutions, including MNOs that may turn into financial institutions very soon. And we're looking forward to that panel where they will tell us more about it. Coming to my presentation, I will keep this brief given we have a tight schedule. A quick introduction on FSD Uganda for those of you who don't know enough about us. We are Uganda's leading financial inclusion think tank, and we also work towards inclusive, competitive financial markets, markets that work for everyone, especially the excluded, women, youth, refugees, smallholder farmers. And we do a lot of research, evidence-based policy making that furthers the thinking around financial inclusion. Our focus for this presentation, as Peter mentioned, will be the evolving landscape of fintech sector, and then merge into the establishment of the National Payment Systems Act and the creation of an enabling environment that will further innovation in this country. So, as Peter mentioned, what is fintech? Why does it matter? Why should you care about it? Financial technology, or fintech, refers to the broad subset of financial innovations that apply and leverage new technologies, and that result into leapfrogging products, innovation, user experience, business models that uproot legacy systems, that create customer value. Let's take the example of mobile money, something homegrown. In the case of Uganda, it was launched in 2009, and within less than a decade, we had nearly 49% of GDP by 2016 circulating through the mobile money system. But that is not the interesting part. The interesting part is the impact that it had. Between 2009 to 2018, 4 million Ugandans were included and brought into the formal financial sector because of mobile money, because of financial innovation and technology such as these. And this is an example of the financial inclusion trends. So in 2006 and 2009, when the FinScope studies were done, you saw an increment in formal financial inclusion was barely marginal. But between 2013 to 2018, you see a significant jump, and most of that jump came from mobile money. But mobile money is just an example of payments. When you talk about the financial services, you're talking about savings, you're talking about payments, credit, insurance, pensions, investments, and a lot more. So how are fintechs looking at the entire financial services value chain? Fintechs are disrupting every aspect of that financial services value chain. I'm not sure you can see this slide, but this is a report that FSD Uganda did in 2018 on the state of fintech in Uganda. And the entire value chain on the top has examples of how payments, lending, investment in savings, insurance, including the banking infrastructure, is being disrupted by fintechs. Even banks, learning from the fintech sector, learning from the competition that they bring, are looking at efficiency gains. They're looking at better business models. They're focusing on creating customer value. Now, I'm just going to give you an example of how fintechs are disrupting just one part of the value chain, which is the loan or lending value chain. So if you're lending, or if you're a digital credit provider, you're looking at first sourcing capital, then you're looking at acquisition of a customer, you're looking at credit assessment, you're looking at disbursement, monitoring and servicing of that loan, and then collection of that loan. Each part of this value chain is being disrupted by not one, but multiple types of fintech providers. So if you're looking at sourcing capital, today you can do that by a cryptocurrency bond. You can do that by a platform that raises capital from multiple people. If you're looking at customer origination, you can do that through an e-commerce platform. You can do that through digital marketing. You can do that through phone-based KYC. You can also use payment gateways as an opportunity for customer origination. If you're looking at credit assessment, you probably don't need loan officers anymore, because you can use multiple data trails on people right from their social media, which could be an invasion of their privacy. So let's make sure we are in compliance with the Data Protection Act. But you can also use psychometric analysis. You can use transaction cash flow data to create a more robust and dynamic credit assessment of the borrower. You can create disbursements through digital wallets, virtual currencies. You can do it through artificial intelligence, and so on and so forth. So the point being that every single aspect of savings to retirement is being disrupted, and disrupted in multiple parts. So what is so unique about fintechs? Well, it all boils down to customer value. If you had to compare the qualities or the attributes of traditional legacy models versus what fintechs are bringing to the table and why more young people are using fintech products, then you will see the difference. If you look at cost of service for traditional providers, it's pretty high because fintechs leverage technology. They can, depending on the service, deliver it at 1/10 the cost. Turnaround time, you will have delays. Whereas with fintechs, they're looking at giving your service on your mobile handset or any other electronic device real time. You can have personalized services. In traditional banking, you would get personalized services if you were a premium customer. Well, when it comes to fintech, everybody is a premium customer because they can customize every single product and service, including robo-advisory based on your own trends and how you interact with their application. So each of these attributes, which is further available on our report, compares how legacy models are being disrupted. This is not to say that traditional providers are not waking up and are not thinking of innovation. As Peter mentioned in his speech, this is an opportunity for banks and other insurance providers, pension funds, and others to see how they can leverage technology. What are the opportunities for collaboration and where they can maybe acquire or partner some of these companies to be more agile with the end goal of still providing customer value. So what does this mean for the present and the future? Number one, fintechs are here to stay. Number two, they have the potential to leapfrog economic growth. The movement of goods, services, and the entire payment infrastructure that drives that, they are the rails. The payment infrastructure is the rails on which goods and services are exchanged. And if that's robust, stable, real time, then we will see a leapfrog in economic growth. Through these partnerships with and you will see a lot more partnerships. We can expect a lot more partnerships with different kinds of traditional players, and we'll hear more about that, I believe, in the second panel. Regulators, one of the fears or risks of regulators, one of the fears or concerns of regulators is fintechs come with risks. As Peter mentioned, you may have the big Goliaths like Alibaba, Google, Facebook, who may understand how to deal with them, who have a huge army of code breakers, lawyers, compliance lawyers, and others. Whereas you may have the guys who are sitting out of their garage or in Makerere University and coding their way through innovation. So how do you bring those two worlds together? It will require unconventional regulatory approaches. We heard Peter, the chairman of FITSPA, talk about regulatory sandboxes. That is an unconventional regulatory approach. It allows the regulator to understand innovation in a controlled environment and then ascertain the risks before it goes to market, thus not only ensuring that customers are protected, but also ensuring the stability of the financial system. It also will allow for an enabling payment systems architecture and enabling an environment that allows for innovation. Now, the National Payment Systems Act that was passed last year, and we are expecting regulations very soon, comes at an opportune time. As we heard the opening speaker talk about great transaction volumes and values that are moving through multiple fintechs. We are talking about information exchange. The National Payment Systems Act gives legal certainty. It gives the regulator the tools in its toolkit to help these innovations grow without causing more risks and gives them direction. The 5 challenges that I think that regulators will have to think about as they build an enabling environment. Number 1 would be changing needs of customers, businesses, and governments. As technology leapfrogs, the needs of customers are going to change, and they are going to change at a rate that we have not seen before. Second, there is growing complexity from this increasing technology. We heard about cybercrime and fraud. This is the third issue that we will face, which is the sophistication of crime and fraud. But that doesn't mean we stop innovation. We need to see how do we match and be able to design architecture that is able to withstand and be robust enough through some of these permutation and combination of fraud mechanisms. Increasing demand to foster innovation. we are going to enter, and we have already entered a generation of digital first natives. Children are born there are children today who don't know how to live without a mobile phone, who don't know how to live without an electronic device. They are digital first natives. They will be the adults of tomorrow, and their demands and customization will be more specific than we expect today. Ability to meet unknown future challenges. Any national payments strategy architecture will have to have the vision to allow for new innovation that's going to come up in the next 10 to 15 years. Now, coming back to national payments regulation, this architecture, the legal framework allows for, as I mentioned, a licensing regimen that gives legal certainty and gives members of FIDSPA the confidence that the regulator, they have formal blessing from the regulator. It allows for a regulatory sandbox. It allows for liaison offices, and it also brings together a more stronger framework for coordination among regulators. Let's take the example of one of the members of FIDSPA. They may be entirely digital. They may be, according to the National Payment Systems Act, a payment service provider. They may decide to provide digital credit. They may also decide to provide insurance and may also give robo-advisory. So how many regulators should they be working with? They will work with the central bank. They will work with the Uganda Microfinance Regulatory Authority. They will work with the National IT Authority under the Data Protection and Privacy Act. And they will work with UCC, the Uganda Communications Commission. When we are thinking about digital technologies that are across multiple regulators, we need to have innovations that will, even in regulatory models, that will allow regulators to come together and say, how do we license based on activity, based on function, and not on institution? All right, so it is now my pleasure to go into the first panel, which is accelerating the evolution of financial sector through enabling regulation. And I will now invite my panelists. It is my pleasure to invite Mr. Makay Amu, the Director, National Payments Systems Department. I then invite Ms. Enid Edroma, the General Manager, Corporate Services, MTN Uganda. I'm also inviting Brian Kalule. Do I see Brian somewhere here? Oh, sorry, I couldn't see you. From Bowman's and also representing Citibank, please join us on the dais. And Mr. Bosco Isabire from the Financial Services Department of Finance. Thank you, everyone, for joining us on the dais, and welcome. My first question will begin with the Bank of Uganda, Mr. Makay. The NPS bill has been in the making for some time. For the benefit of the audience, could you walk us through the importance of this bill and what objectives does the central bank hope this will achieve? And what changes can the industry and customers expect as a result of this bill?
Thank you very much, Rashmi. Thank you all participants for today's symposium. I think my distance is not so bad, so that I can speak. I can lower just a bit. And we're grateful for this day and for the opportunity to discuss those issues that Rashmi has mentioned. And I think the approach is good to me because what she has already raised gives me an opportunity to run through many things. So the bill, the journey to the bill started sometime in 2017 when Cabinet passed the policy, and that paved the way for drafting the National Payment Systems Bill, and involved many stakeholders, including Parliament, First Parliamentary Council, and Cabinet. So we are glad that on July 29th, the President signed, after Parliament passed the bill in May. June 29th, it was signed by the President. I'm also happy to report that it has already been gazetted. It was gazetted on 4th September. So this means that the bill is now in effect. The bill is in effect. Section 74 of the Act, not the bill, the Act. Section 74 of the Act provides for transition period of 6 months for participants who are already in the payment space, basically to organize yourself and be able to apply for a license. So currently, working with the First Parliamentary Council Means of Justice, we were drafting regulations. We have a workshop this week or early next week together with the First Parliamentary Council to basically move through and agree and then finalize the draft regulations. When we have the draft regulations, after Bank of Uganda Executive Management looks at them, we will then involve all the stakeholders. It's a process that we want to really fast track. So we are starting with the 4 regulations. The one on licensing, then the general payment systems regulation, one on regulatory sandboxes, and the one on agents. So agents are expected to pay. So those are the 4 so that we can be able to implement the Act. So that's about the Act. And the second question is about the importance. Thank you.
And what can customers and industry expect as a result of this?
Okay. First, the importance, like any other financial sector law or regulation, it basically describes how you enter the payment space, how you are supposed to behave while you're in the payment space, and how you can exit, an orderly exit. So basically, that's what the Act is providing for. Of course, it has permissible activities, then it also has prohibition, what is prohibited. So basically, that is just like any other law, that's what you'd see in the Act. But as you're aware, we have given no objections since 2009 to 4 MNOs, that includes MTN, Airtel, UTL, AfriCell. We also have 3 other payment service providers, Mcash, Money, and MicroPay. And today I've learned that there are over 100 fintechs. We have been thinking of the number being around 70. We have interacted with many fintechs. And again, Bank of Uganda is very open. We welcome you in there. We have a section for financial innovations. That's the section which is going to handle issues of regulatory sandboxes. And the law provides again for regulatory sandboxes. There are going to be many partnerships and collaborative arrangements. So if you are looking at the credit side, then there has to be another kind of license, maybe credit only. Then you got UMRA, Ghana Microfinance Regulatory Authority. Then most likely, then you partner with an MNO, partner with a bank. That's the kind of arrangement that arrangements and partnerships we're going to see. We're already seeing many innovations for different financial services. Deposits, micro deposits, micro loans, even the border fintech, how technology can help, and all this, and welcome all these developments. And that's why there's a section on regulatory sandboxes. But as you know, the no objection letter we have been giving does not have the full strength of law. This law now creates a clear basis, legal basis for entry, how you operate, and how you can exit the payment space. So the objectives, basically, we're looking at operators of payment systems, payment service providers, including issuance of electronic money, and also issuance of payment instruments. But our main objective is to promote safety and efficiency of the payment systems so as to foster economic growth and financial stability. So the second objective is to provide a framework for oversight, which will be a risk-based approach. We're not not talking about supervision, but we're talking about oversight. I will explain something shortly, and I'll also try to explain the difference. So we're going to take a risk-based approach and a tiered approach. Risk-based is we are going to look at different categories of fintechs, MNOs. So there's what they call systemically important payment systems. Systemically important payment systems. So this could be, like Rashmi explained, could be because of market penetration, the volumes of transactions. So it become systemically important. Systemic risk is the disruption from one system can get transmitted, affects the other systems, and affects public confidence on use of payment systems. So it could be due to financial risk or the values, big values. So if you talk about volumes, if you look at within the bank, we have the electronic clearing system. That's already a system and holds big volumes of transactions. And a failure there through a clearing and settlement process could bring big problems. Payment systems, as you will also notice, it's like a plumbing system of the economy, how the financial resources flow to support transmission of monetary policy. So I've talked about systemically important payment systems. Could be due to volumes, could be due to values, or financial risk they handle, and basically I'm talking about credit, liquidity, risk, all those issues. But we also have, so when you talk about values, that's like RTGS. You know that the central bank also operates and also operator of systems, and then we have the retail payment systems. But this is recognized internationally by Bank for International Settlement that central banks play all these roles. So what's important is creating a Chinese wall so that you have one unit operating the system, then you have another unit doing the oversight, but they should be by different people or different responsibilities. In the bank, we'll put it at division level. So you have 2 divisions, because even the systems operated by the bank are supposed to be subjected to the same treatment, just like those in the retail space. So I've talked about systemically important payment systems. The second category is prominent systems, and we shall be again talking about prominently important payment retail systems. Prominent, why? Because the volume, I've already had the transactions processed are like 3.5 million. I think that came from Peter. So you could look at a percent, say if you're holding 25% of that, then you become a prominent system. The other way is that it could be the only system of that type, like mobile money, as we know. So those will now again be subjected to the oversight. So that will include mobile money, it will include ABC, InterSwitch, all those kind of systems, and fintechs as well. Then there are those which we are non-CPs, non-systemically important systems. So you could have a lighter set of regulations for these ones. Basically, maybe sign agreements, rules and procedures, and making sure that there's compliance. So that's how we're going to approach it from the oversight perspective. But of course, systems keep changing and evolving. So even if it's not systemic now, tomorrow, it could change. So we remain in constant touch. And there are also issues of financial collateral arrangements. You know that the central bank has settlements, and you usually for settlements, like for banks, then you might require some security collaterals. Most times the treasury bills, like for the interbank transactions. So all these issues are being included in the law, because there could be a situation of insolvency. If there's insolvency, at what point do we have these transactions which are in transit? So what happens? So those are the kind of things which are under that. Then, of course, I've talked about that regulation of and the issues of electronic money. There's going to be improved transparency and consumer protection. Consumer protection is given its own section in the law. I've talked about regulatory sandboxes, which is also included. So what changes should the industry expect? First, the MNOs need to incorporate legal entities to separate the voice and data. So the electronic issuing part of the MNOs will now be a company, a legal entity which will be licensed. We're also seeing a transition from what we now call an escrow account to a trust account, being managed by trustees on behalf of customers, subscribers. We're seeing better and orderly management of dormant accounts, consumer protection, a regulatory framework for sandboxes, and this will promote financial innovations. So if we look at the current situation at the bank and where we're going next, you see that today we are looking at deposit-taking financial institutions, and basically the focus of supervision is on liquidity, risk management, solvency. So basically financial condition and risk management. In terms of oversight, as I've explained, we're looking at promoting safety and efficiency and containment of systemic risk and other payment system risks. So this will involve licensing, monitoring performance based on information, qualitative and quantitative, assessing performance in line with what we call principles of financial market infrastructure set by Basel, which includes the legal basis, governance, risk management, all those issues, and cross-border activities. We will also induce change where necessary through moral suasion, could make a public statement to sign agreements. We cooperate with other regulators, and we also have a provision for take corrective actions. The law again provides for supporting innovations so that fintechs access the payment ecosystem to test their products under a controlled environment for a specified period of time and specified conditions. I think that's the running I've managed to run through. Then I know that will provoke a lot of questions and discussions. Thank you very much.
Thank you, Mr. McKay. Given the short timing, one quick rebuttal question to you. So when we look at fintechs, there's always a tension between fintechs and regulators. Fintechs have a culture of innovation, and with innovation comes risk-taking, where central banks largely are risk-averse. So what is, given that the Bank of Uganda is now going through this process, what are some of the learnings or advice and changes largely changes that we can see at the central bank? How are you changing your approach to fintechs? Any quick response to that?
Quick response is that you can't regulate what you don't understand. So even during the COVID pandemic, we have created Microsoft Teams discussions. So when you request for an objection, we engage you with your partner, you walk us through what the product is all about. We try to understand it from the risk side, from the accounting side, and we provide guidance. One of the things we discovered later, initially we thought that for any of these arrangements of product, there must be an escrow account. We realized that's not necessary. You can't have escrow account in all the 24 financial institutions. So what is important is the audit trail, the accounting bit of it. In a respective, there should be maybe like a suspense account which interfaces with the platform. And so long as the transactions are clear and they can be trusted, there's a clear audit trail, then we have no problem. But fintechs, you have to have some kind of registration, and also demonstrate some kind of experience. Sometimes you don't start business in one go. Maybe there's a sister company or a backup. Like now, MTN is moving away from the bigger MTN. So you can't say MTN doing electronic issuance has no financial statements or anything, but now we'll rely on the parent company and what they're already doing. Thank you.
Thank you. I was planning to go to the Ministry of Finance, Bosco, to you next, but given that McKay has raised the question of MTN, I'm putting MTN on the spot. Enid, so walk us through we already have seen a lot of news articles about the MNOs preparing in advance of the upcoming regulation. Walk us through a couple of big changes that we can expect.
Thank you, Rashmi. Am I allowed to take off my mask? Thank you. Can I be heard? All right. Thank you for the question, and thank you for that excellent presentation that you made. And thank you to our regulator, represented by Mr. McKay, for that very elaborate explanation of the bill, of the act. So as Mr. McKay had mentioned earlier, MTN is required by the law to separate its fintech business from its general business, its GSM business, that's the telco business. So we have commenced this process, and while we await the regulations from Mr. McKay, I think we have already started to see the benefits of having a separate company. Our customers are going to have greater clarity, a wider catalog of products, because we now have to, we are under a different regulator that's going to allow us greater scale and greater breadth in that space. Also the fact that Mr. McKay had mentioned earlier that there's going to be different approaches to regulation for different categories of fintechs. We are quite pleased to hear that, because then that will allow us greater innovation and flexibility. You mentioned earlier in your presentation that fintechs require, they ought not to be burdened with the entire regulatory force, as it were, because innovation and technology move faster than regulation. So we are pleased that the Bank of Uganda has taken the approach that there will be different layers of regulation, and we're hoping for a lighter approach regulation to all these things that will allow for greater innovation, and of course, at the end of the day, the customer would be the beneficiary of this. We're also thinking that with regulation of the sector, the fintechs, because as you can imagine, they're small little companies, some of them are small little companies, with a very passionate person at the back operating out of a garage. How do you deal with a person like that when you're a big player like MTN, when you're going to be listed in a couple of months, when you have so many compliance obligations to deal with? So the fact that all these fintechs are going to be regulated is going to give greater confidence to us, the partners that are going to be working with them, or us who are already going to be some of those partners. It will give greater confidence and, of course, spur greater growth for the individual companies as well as for the economy. So there's so many other things that we can speak about. We've seen what has happened with COVID. That, for me, is just a demonstration of why we need to have, one, what I've already spoken about, a light touch regulatory approach, but also a greater speed to digitization of all our activities. The movement of money around the economy can become 100% digital. And that can only be done if we are all regulated properly and have the confidence and comfort in what the regulatory framework provides.
So, Ian, I'm just going to put you on the spot. So, you might have to turn your microphone off. Let's take the example of MTN. So the premise why central banks want the segregation of voice, data, telecom business from the financial services business, yes, there is a risk involved, but also its competitiveness. Right? We want a competitive financial industry. If you have full control over channel access, the USSD and the mobile financial services, are we creating a more competitive environment, or we are in an oligopolistic market? That is one of the biggest questions. So coming to competition, we are hoping that the division of products and services, telecom versus mobile financial services. How is MTN going to look at competition with this new mobile financial services? Look at all kinds of telcos and products and services at the same. Will there be? Can you tell us a little bit more I don't want to put answers in your mouth, but yeah, we'd like to hear more from you.
Okay. Rashmi, clearly you have put me on the spot, and this ought to be a question for the regulator, but perhaps I can throw some light on what we perceive. So I think the regulator has already taken cognizance of the fact that we are already doing this business. So we didn't just fall out of the blue, and 6 months from the date of commencement of the Act, you will draw a solid black line and say, this is a different company. Mm-hmm. There has to be a natural evolution of these things, and I think the regulator has taken cognizance of that. So in requiring that we split, this is an attempt, of course, by the regulator to allow us to, we have all this infrastructure and we have the benefit of scale from our customers. That's a very powerful tool already. We have marketing and distribution. We have all these big accelerators for us that have made us who we are as MTN, the telecom company. So now when we split, there are requirements, and we expect that there will be requirements in the regulations, but also just in the competitive legal framework, as it were. We expect, and we are taking into account those requirements to maintain an arm's length business approach to everything. It is not feasible to expect that the parent MTN will not render advantages to its child, the fintech. But we do expect that the regulations that will be formulated will take into account that, but also take into account that we are already in existence. It's got to be an evolution. So what we've seen happen in other jurisdictions is that there's some level of control. There's some aspects of price control and all these sorts of things. But ultimately, there has to be fairness. MTN is an ethical company, and we would not do anything to sort of kick any of our competition out of the market. But we must take cognizance of who we are. We are who we are, and it's not a crime. But we will operate within the required parameters that will have been gazetted when the regulations become law.
Thank you. That was a great response. Going to the Ministry of Finance. So, Bosco, the Ministry of Finance, along with the central bank, championed two big frameworks. There are guiding frameworks for the financial sector. So the first was the National Financial Inclusion Strategy, and the most current one is the Financial Sector Development Strategy. The Financial Sector Development Strategy, for viewers and people in the room, has three big pillars: financial services for all, financial services for the market, and financial services for growth. So when we look at the National Payment Systems Act and the new architecture, the regulation, the innovation that we are seeing, how does the Ministry of Finance see this fitting within your financial sector development strategy? What is your vision? Could you speak to that?
Thank you, Rashmi. Let me remove this, please. Thank you for all of us being here. As a ministry, we are concerned with the citizen at heart. So Rashmi presented a paper this morning, and she showed us the movement that technology has taken us in terms of inclusion, but also leveraging the advancements, fast-changing technology. We saw the move from 2009 of 52% in terms of access to formal financial services to around 58 in 2018. So we saw that this technology, as she presented, is more likely to disrupt most of doing things, how we get credit, how we do savings. However, as I told you, as a ministry who is concerned about the citizen, we look at the safety and efficiency of these changes to the citizen. So most of the initiatives that the government has taken, one of them being the financial inclusion strategy that came out for the period of 2016-17, running to 2021-2022. We have policies, the capital markets development master plan that seeks to develop the bonds market, the equity market, and also other initiatives like also the national payments policy. So as a ministry, we wanted to bring a comprehensive strategy that would put all these initiatives together, talking about technology, talking about how do we allow our citizens access financial services safely but also efficiently. Next was, how do we develop the markets using the technology so that our people can enjoy financial services with that urge of protection. That's how we developed the other objective of financial markets, financial services for the markets. Then we are also a Ministry of Finance. We see how financial services can drive economic growth and development. So that's why we are using the potential of the financial sector to drive growth in our economy. So those three pillars of the financial sector development strategy are hinged on the role and the potential of the financial sector to drive our citizens in households, businesses, but also investments to drive our economic growth. Therefore, our strategy is bring about a comprehensive framework that will map out all government and private sector and public, all initiatives that we want to do to fulfill economic growth in the country. So the strategy is mainly all the initiatives that public and private would want to make to transform our financial services. Now, if you go to the second part of the question that says, how do we see the national payments framework into the national financial inclusion roadmap we have?
I gave the example that if you're a payment service provider, you will get now, according to the National Payment Systems Act, an annual license from the regulator. So there's a cost implication to that. If you also then provide credit, you will get an annual license from the Uganda Microfinance Regulatory Authority. You will get an annual license under the Data Protection and Privacy Act. You will get annual access to Uganda Communications USSD codes. So is our regulatory model and framework making it very hard for young indigenous fintechs to survive?
Thank you, Rashmi. Good afternoon. Well, that's a very interesting question. The good thing is now we have a law in place, and I think I'll focus on that and assess whether it really enables the indigenous fintechs to survive. And when I look at it, I think there are two big wins from it. The first is the one of the tiered licensing categories that Mr. McKay has mentioned. I think to me it's a recognition that there's no one size fits all. Different players have different capabilities, they have different resources, and they can't be treated with the same broad brush. So I think in a way that favors the indigenous fintechs. And then the second big win, again, is about the sandbox, which he elaborated. And I think it will enable fintechs that have innovative financial products to try test them in the market without the burden of licensing. But on the larger level, if you consider the regulation, the law as a whole, and considering that it's a territorial law, and that's the tendency of drafting these laws, they seem to focus on Uganda and regulate entities that are in Uganda. But when we're talking tech and finance, we know that the world is flat. There are no boundaries. And so the biggest threat to the fintechs for me is these tech fins. I think they tend to reverse the phrase tech fins, the Googles, the Apples, the PayPals. I can sit here and transact with Apple, and who is never regulated at all in this country. And that's where this regulation, that's where this law falls short. It doesn't address that territorial aspect. Now, when you talk to regulators, they tell you that there is no realistic way of doing that. Maybe not, but I think the good example would be Europe. Europe has really managed to curb in these guys and bring them under regulation. Perhaps that's something the regulators should look at. Did you ask a second question?
You're an excellent lawyer. You deftly avoided my question. Let's talk about this because we want indigenous fintechs to survive, and even if the cost implication is not very high, there is an opportunity and transaction cost trying to get so many licenses. So the good thing about the NPS Act, it already saw this as a problem and has a clause that talks about collaboration with other regulators, including the Capital Markets Authority. So, but the question still begets, what kind of different regulatory models should we be challenging? Of course, you don't necessarily need to ask, but it's a question for all of us, that maybe this is a time and it's an opportunity for us to think about new emerging regulatory models. An example could be, again, not my position to answer these questions, but if you're licensed by the central bank, maybe you don't need that level of supervision from another regulator. But that could be one opportunity. Now, coming back to you, and given that you're representing the banking industry, what kind of, how is the banking industry looking at the NPS, upcoming NPS regulations? What are they excited about and what are they not excited about?
Well, brother, am I allowed to speak on behalf on that issue? No, I think that the banks are excited about this law. As you may know, they are very rigorously regulated, and I think one part of them, though they may not say it, but deep inside, they were a bit jealous of these payment service providers who do some services similar to theirs, who aren't regulated. So I think it creates some kind of level playing field for everybody in the payment space, and I think they're pretty excited about that. But I think more than the jealousy bit, I think it's also it's good for the system. I mean, these payment service providers and issuers of electronic money pose a great systemic risk to the bank, to the financial system. So and you can't be an island and say, I'm a bank, I'm regulated. So it should be a wholesome effort, and I think the law is a great step in the right direction.
Thank you, Brian. Thank you very much. I have, again, one last question for you. And you are welcome to direct it to the banking industry if you feel. So there's a very interesting and much awaited clause in the NPS, which is around interest-bearing escrow accounts and pass-through of interest to the customer at a ratio decided by the central bank. How are some of the largest escrow holding banks looking at this?
I think Wilbur should take that.
Okay. But I'm sure that that's an interesting area as well.
Yeah, it is actually. But I want to take you back to the question you asked about what better regulation approaches we can take. And for me, there's a word regulators love to throw around, like we are technology neutral, that for us we focus on the service, not the tech which you use to provide the service. In real world, I don't think they do. So, but that would be a good model to adopt. Yeah. If you're a payment service provider, you should have one regulator who regulates the entire spectrum of the service. And so that you don't have to go to UCC for the code, then you go to another regulator for some other license. And then, so that approach would really be it will be very helpful to the indigenous fintechs you've mentioned, and generally make regulation very, very efficient and less burdensome.
Thank you, Brian. We really appreciate your honest answers. Thank you so much. This will come back to Brian, because I want to bring it back to the Ministry of Finance, and we have very little time. I think what you had mentioned something earlier, that the banks are also interested about collaboration. This is an opportunity for collaboration as well. Do you want to speak to that a little bit more on how is Citibank or others looking at collaboration and adopting technology?
As I mentioned, I think the banks are not, in most cases, they are not self-sustaining. For them to be able to provide the services they do, there's somebody in the back office who provides the tech, who does the aggregation, and who enables the settlements. So if those persons are going to be regulated, then it's a great thing to know that I'll be dealing with regulated entities who have gone through the vetting process and who can be trusted and perhaps do not pose a risk to either myself or the system in general. So I think, and probably Wilbur can confirm, they are looking forward to making collaborations with all these people, which I think they're already doing. Yes.
Thank you, Brian. Coming back to the Ministry of Finance. So I will, would like to hear your opinions on this. So as policymakers and including development partners, we include ourselves as well. A lot of times we look at innovation from the supply side. We look at regulatory challenges, systemic challenges. One of our aims is to also become a digital economy. that is part of our National Development Plan, NDP3, to become a digital economy, to include sectors, as we heard, that drive the real economy. And when we talk about the financial sector development strategy, we're looking at financial markets that work for all. What kind of opportunities, if you could very briefly, given we're short on time, speak on some of the of how we can achieve that as well. It will round out this discussion.
Thank you, Rashmi. Again, let me take this opportunity to speak without the mask. As you kindly noted, some of us who may be here older than me note that there was a shift some years back by government. Those who used to get checks, and like if you get your salary at the end of the month, they give you a check, like, or some cash. There was a shift in that we moved directly to EFT payments, but also direct through your bank. Now, the challenge we are seeing is, even when you get your money through the bank, you go and cash it. So when we realize such trends, like even mobile money payments, most of them are pushed to someone, and then they cash it into cash. Then they go to the market using cash. So we are looking at, I think what we realized is people are looking at the risks involved in the fintechs, but also in these platforms we are putting to them. Either they are not aware of the safety they have, but also their desire to have cash in their pockets. So as a ministry, as stated in the financial sector development strategy, we prioritized the issue of digital financial services. And here we are looking at all forms of collaboration between public and private, plus also sensitization of our public to know that there is safety in these platforms we deal with. So it's a government initiative, right from the development planning to our strategies and policies, that we will drive digital economy in this economy. So the financial sector development strategy has given us a platform to test how do we move from a certain level or percentage of cash-based economy to a digital financial economy, because of the potential it will bring to move goods and services, but also our desired growth goals in the Vision 2040.
We are coming to the end of this panel, and thank you all for being such a sport and being in the hot seat. Each of you are exceptional in your field, so I will request that each of you give 1 minute of concluding remarks, issues that you think are pertaining to an enabling environment that we didn't cover and you'd like to inform the viewers and this audience. We'll begin with ladies first, so Enid, you're up.
Again, Rashmi, I probably will just pick on from a question that you had asked my colleague from the banking sector about regulation. And I think this is what would spur development of the fintechs and encourage further innovation. So over-regulation can never be a good thing. So what we encourage the Bank of Uganda to do, and I think they're already doing that, is to minimize the heavy hand of regulation, particularly for those smaller fintechs, and also the multiple regulation coming from the telecom sector. We've benefited from the very innovative cross-pollination of regulation, as it were, between the Bank of Uganda and the UCC, the Communications Commission. And that's how we've been able to develop our whole mobile money ecosystem. The very creative collaborations that we've had with the banks in the escrow accounts that are now going to be moving into a completely different formation in the Act. So my view would be that maintain a very light touch regulatory approach, allow, yes, risk-based regulatory approach, allow for the small innovators to really blossom and grow, and those will be the people that, in collaboration with the bigger MNOs, I mean the world is their oyster. It will just spur growth and development if they are supported by little or more, very little regulation. It will allow them to be more innovative. Yeah.
Thank you, Enid. Those were very inspiring. Mr. McKay.
Thank you, Rashmi and audience. Like I said, our main mission is to promote safety and efficiency of payment systems and contain systemic risks. The other one which I want to mention is that I talked about an oversight framework, which is risk-based, which I already mentioned. Within that framework, there's also a requirement for collaboration and cooperation, like between regulators, domestic regulators, but also cross-border with other central banks. It's like what happens with the banks. There's what they call home and host relationships. So now when you see M-Pesa standing somewhere, going forward, we will be very clear with the Central Bank of Kenya how M-Pesa is in Uganda. The other one is we'll really try to minimize burdening regulation and duplication of in some areas. But we're also moving forward to have a strategy for development or promotion of e-payments. And I know that on 22nd we shall be having another workshop working with the bankers and all the players. Sometimes people say a strategy in a strategy, how many strategies are you going to have? But at minimum, we want a clear action plan on how we want to move, say, over the next 5 years. How we want to develop the infrastructure and all these other issues which are important to promote e-payments, because cash is very expensive in many ways. Thank you.
Thank you, Mr. McKay. Brian.
Okay, thank you. So, as a lawyer, and looking at this law, I think, and going by what Mr. McKay has told us they have in stock regarding the regulations and the risk-based approach, and you mentioned something about the agreements, that those who don't pose risk, then they execute agreements with the central bank. For me, the National Payment Systems Act is a great piece of legislation, and you may forgive my cynicism earlier about it's failing to look at the international players. But it's a great piece of legislation. It's in line with international standards, international best practices. It's very progressive in its operation. If a risk comes, then they devise regulation to tackle that specific risk, so which makes supervision very effective. So I'm super excited, and I think the fintech and the general payments sector should be excited about it.
Thank you, Brian. Bosco.
With one caveat, though, we wait to see what actually comes out in the regulations. We hope they reflect that excitement.
Thank you, Rashmi, for moderating this session. We as a ministry would like to thank you for inviting us, but also thank our regulators, Bank of Uganda, because as he has informed you, the issue is now we are waiting for the regulations, but the bill is in effect after its gazette. So as our interest is looking at there is minimal risk to the client, and also the law is not a cast in stone. At any time you can bring proposals if you feel certain provision is not working out well, not for your benefit, but also to the whole economy. So as a ministry, we have the effect to pose amendments to the law if you feel there's a provision that will impede the implementation of our objective in the national payments policy. So as we work also, as Bank of Uganda has noted, as we work in the regulations, there is need for collaboration. Your proposals are necessary to make the payments landscape very working. Thank you.
And I'm sure you're also, as regulators and policymakers, excited about consumer protection. It allows for more enforceable consumer protection.
The only point I've forgotten, like the bill, the act also is mandating interoperability. So, and for us, we're excited about that because our clients did convenience our customers. If I'm on MTN, why don't I transact using my line to, I know it has been there, but now the act is forcing and mandating this process, so the clients are happy also.
Thank you very much. I think our time is up, and I would like to thank each of the panelists. Thank you for being so generous with your time and views. Thank you.
MTN Mobile Money API is an initiative in which MTN Uganda has exposed its mobile money APIs to enable mobile money partners. MTN Mobile Money API is an initiative in which MTN Uganda has exposed its mobile money APIs to enable mobile money partners and developers to be able to consume or get access to mobile money APIs and be able to integrate to MTN Mobile Money with ease and be able to develop products like collections or disbursements using mobile money. Open API in a layman's language is application programming interface. It is an interface that enables a developer or a partner to integrate or connect to MTN Mobile Money and be able to launch their services that use mobile money as a payments option. For ease of understanding, OpenAPI would look at it as a socket. So what MTN has done,
to be able to plug their apps, be them mobile, be them web, into MTN's core infrastructure, which will give us access to a very large consumer base and reduce the time it takes to go to market.
So I'm excited about the open APIs because of that, because of the power that it gives a small developer or an amateur developer or even an expert developer who is like just wants to integrate for a bank to start collecting money from its customers, or someone who is building a boutique online, they can now start selling hair or selling all these things. And so the potential and the commerce that it's going to be realized by just these APIs is amazing, and that's why I'm excited about it, and I'm very grateful to MTN for opening up these APIs, and not just opening them up, putting it in a language that is very familiar for most of the developers.
Rob Skidmore, and I work at the International Trade Center in Geneva, Switzerland. Through the NTF4 program, we are delighted to be cooperating with FITSPA on this year's Fintech symposium. Why do we think financial inclusion is important? Because it will unlock enormous potential both for individuals who are unbanked currently and for small companies. Why do we coordinate with FITSPA? Because we found them to be a very dynamic organization. They've already made incredible strides in terms of improving the regulatory environment for FinTech, and we see potential for that to increase even over the next year. We also believe the FinTech companies are some of the most dynamic in the Ugandan ecosystem. We're delighted to be also working with them both to find investors and to help them access new resources through the NTF4 project. What are the results we see from working with FinTech companies? We see jobs, we see contribution to additional growth, both directly through small companies and individuals and through creating employment in the FinTech and larger technology ecosystem. So once again, good work, FITSPA. We're delighted to be part of the symposium. Thank you very much.
Good afternoon, ladies and gentlemen. distinguished panelists is around partnerships for deeper, meaningful financial inclusion. I'm glad to have three gentlemen who will introduce themselves in a while. But myself, I'm Richard Ndahiro. I work for the United Nations Capital Development Fund, and it's a pleasure to be moderating this. As we get into the discussions, I think I'll start on my immediate next. Ronald Azeire, representing the Fintech sector. Maybe please tell us a bit more about what you do, and just to kick us off, one partnership in the past that you think has headlined financial inclusion in this country.
With your permission, let me remove my mask. Again, my name is Ronald Azeire. I'm the Managing Director of Pegasus Technologies. And Pegasus Technologies is the typical fintech, as you hear it. Of course, I'm a member of FITSPA. And as our chairman, Peter Kaumi, very articulately said, we do a host of very many things. I think he articulated all of them very well. But to answer Richard's question directly, one of the collaborations we did, for example, that fostered financial inclusion, and I'll give you just a small example, was the work we did with the bill payments APIs that were developed that saw the shutdown of cash offices at most of the utilities, especially, say, National Water or Umeme, that then forced people that would be paying for those utilities to have either a mobile money line or a bank account to be able to pay those bills. So anyone that had cash could no longer go and pay for those bills. And we felt that was one of the ways that we forced people that typically had cash to either get a mobile money wallet or a bank account to be able to settle those bills. So for me, those are some of the collaborations that have fostered financial inclusion.
Thanks, Ronaldo. Next is Herbert Olowo from the banking sector. Please tell us more about yourself and that partnership that you think of. Thank you.
Yeah, thank you very much. Probably without the mask, I'll be clearer. The name is Herbert Olowo from the Chief Information Officer for Stanbic Bank. Very glad to be here, and thank you, FITSPA, for the great work that is being done and for all the partners that are here. So when I think about the partnerships and just looking at the ones that are existing, my opinion is that the tripartite kind of agreement is what has the impact. And when I say tripartite, there'll be the MNOs, there'll be the fintech, and the financial services institution. And the three of them make a very good partner, not to mention the sponsorships that come from the other organizations to be able to be impactful. I am actually one of those who believe the partnership is where the power is, because with the partnership, you're able to tackle the different parts of the economy. Thank you very much.
Thanks, Herbert. And we have Stephen from the telecom sector. Please tell us more about yourself and that one partnership that comes to your mind.
Thank you very much, Richard. Good morning. It's great to be here. My name is Stephen Mutana. I partner with MTN in the area of fintech or mobile money. I'm kind of a veteran. It's 19 years, but it's been exciting all the way. And since we're talking about innovation, and to your very question, I think sometimes when people see where we are today, and when I say we, I mean all the key stakeholders around bringing this mobile money proposition to life, I think we forget that it takes grit, it takes pain, it takes determination. Just for information, MTN mobile money started off in what was then our shared voice business. If you remember something called Village Phone, MTN Village Phone. So we had been experimenting around making voice services accessible to people who didn't have phones. If you remember the yellow phones that people used to host on stools. So we kind of made a success of that. So when this whole mobile money idea came up, we said, let it start in that business, where we are with the person on the ground. And that's why you see most of the first services were P2P, people sending money to each other, people withdrawing. Today we look back and take it for granted. Now, as part of that evolution, we were struggling to make a breakthrough in the lives of ordinary Ugandans. How can they use this service to transfer value to each other, to withdraw, and most important, how can they use it beyond that? And please don't think this is choreographed. I haven't spoken to Ronald, but when I was reflecting on that question, Pegasus is one such partner at the time. We actually deliberately set out to select aggregators and integrators who would help us evolve the ecosystem. And we have many of them in this room. There's Your Uganda, there's Cellulant, there's Pegasus. But I would like to focus on Pegasus because at the time, and as Ronald pointed out, they had something unique. They understood how to digitize certain key business processes in some of these customers who wanted to do business with. The utilities, for instance, because that's one of your first points when you're trying to evolve the ecosystem. So with that unique capability, we brought them on board as our partners to evolve the ecosystem. And boy, what a job you guys have done. Pegasus today, I mean, these are the guys, of course, they have other partners and they have their competition and co-actors, but these are the guys who literally integrate us with the banks. These are the guys who enable you to pay for your Yaka, National Water, and it just goes to show, people talk about competition, but there's co-opetition, where you actually bring people in who bring value, and overall you both gain, and most important, the customer gains. So it will be Pegasus for us. Yeah.
So much, Steve.
Okay.
Thank you so much, Stephen. And this gets us into the discussion. And just to frame the discussion, if you look at, it's a good time that we're having the discussion now because it's a decade that we are into another decade. 2020 is a year to remember. But if you look at mobile money for the last decade, we could actually give it to mobile money for the biggest contribution. The previous panel talked about it. A lot of the gains that we've had in terms of formal financial inclusion have been driven by mobile money. But of course, behind that, as Stephen has just mentioned, has been fintechs like Pegasus. And behind all that has been the banks that actually back all the transactions. But now I would like us to project into the next decade. And I'll start with Ronald. You are the one seeking for some of these partnerships. You have most of the innovative ideas, and you're knocking at some of these doors. What are some of those partnerships that you think were missed in the last decade, or the opportunities that you think are coming up for partnerships that will drive us towards 100% financial inclusion, but deeper financial health?
So the last decade really was for setting up a foundation, and I'm glad that that foundation has been set well. I'm happy that the two gentlemen here are one of those that we collaborate with deeply. When I talk Stanbic or when I talk MTN, these are very, very deep collaborations that we have. And like I said at the beginning, initially it was a change of mindset. How do we make people believe that payments can actually be digitized? And how can they trust that digitization of payments? And I think that point was well made. In the last decade, we've seen a transformation, of course, aided by very many other things. Literacy levels have gone up. The penetration of technology, smartphones has gone up. People, if now, if 72% of the population can operate a smartphone and be able to do all of these things. So I think all of those have been a very, very good foundation to lay. Now, to echo Stephen's words, what now needs to happen is how then can we, with all of this readiness that has been created, how can we position ourselves in such a way as to offer services that everyone is yearning for? Of course, the globalization has also made people aware of what other things they can do. Now, if you look at things like insurance, I mean, Pegasus is never going to start an insurance company, but we can start a product that allows insurance companies to take money from people that need insurance. I mean, how many people here can pay for their insurance from their mobile wallets?
and when they pay for that money, into which bank account. Remember, at the end of the day, there must be a bank underwriting all of these things. That money must end up in a bank account. Pegasus is never going to open a bank. That's never our interest. We're not going to open an insurance company. We're not going to open a bank. But our job is to make sure we have a product out there that allows you to pay money from whichever channel, whether it's the mobile phone or from bank account, or from both, because now you can use your mobile phone to pull money from your bank account and pay your insurance. Can we make that product that allows someone to do that in the comfort of their house, and the movement of money, again, under the regulation of people like the central bank, is sure, is trusted, and can allow people to enjoy those services? So for me, collaboration and, again, not competition is the way to go. Remember that our threat is not really DFCU versus Stambik or Ronald Pegasus versus Yo Uganda. I think that's looking at a very small thing. The real competition is going to come when the likes of WeChat or Amazon or whatever come here in Uganda with a product of Facebook that allows people to exchange money and who are caught sleeping, busy in competition without realizing that the threat was actually out and not in. So for me, collaboration is the way to defeat any of those things. We do not want banks to start becoming fintechs in themselves. Neither should Mr. Mutana need to worry about how he can. And I'll give a good example. Recently, there was the need for people that are not in formal employment to have some sort of retirement benefit saving. The key question was, how do they save? How can they have a sort of NSSF that does not is not attached to a salary, but everyone in their own means on a day, every week, can contribute a small amount of money towards their retirement? And the answer purely was in what product can the fintechs provide that allow a border man who has ridden his bike the whole day to stop somewhere and send 5,000 shillings to his retirement benefit scheme, and that money ends up on their bank account, and this guy can see his balance running and so on. So how do we take retirement benefits to the informal sector? Now, clearly banks are never going to innovate that, neither with the telecoms, but small groups like ours can come up with that product, of course riding on the platforms and the rails of the banks to deliver those services. So I believe the next the next decade is to deepen the kind of services that we can extend to the population who are now ready by virtue of education and by virtue of course, the penetration.
If I may just probe you deeper and maybe make it short. What needs to happen for you as Pegasus, as the fintech sector, to come up with those products? You talked of insurance, you talked of deposit taking, but what is missing today for you to do that?
I think three things were missing. First of all was regulation. How do we get the population to trust what we are doing? And I'm glad that regulation has come in now to say, these guys you're dealing with are regulated. That's not to say that previously we were not, in a sense, self-regulating, as our chairman, Peter, said. We had already had mechanisms that allowed us to self-regulate. But even beyond that, our partners like banks literally upskirt Pegasus. They come to us every quarter. They look at our books, they look at our environment, they look at our even operational health and safety policies. They look at how we're doing all of that. Well, I think we're easily the most regulated person, and Herbert here is one of the instigators of those things. But every 3 months, we're literally upskirted by the people we give those services, and they check us in every way. So, but regulation now allows the population to know that we can trust Pegasus. If they give us a platform that says they will take our deposits, that will work. So that was the first thing that was missing. The second thing was a deliberate realization by partners like banks to say, we are not in a position to make this innovation ourselves, but can we leverage Pegasus, whether it's by MOUs or can we allow the likes of Yo Uganda or Pegasus to do these innovations, and we make them our flagship innovations. One of the things, for example, that happened was we developed a system that's a merchant system that Stambik a couple of years ago said, we will take this up as our flagship merchant system. So that deliberate effort by, say, banks or the likes of the MNOs to say, Pegasus, We give you the baton, go ahead and run the innovations. We will give you the platforms. At the end of the day, we are the biggest beneficiaries. Go ahead and run and innovate and do that. And then, of course, the third is to have that understanding of what does the population want. We don't want to build bridges where there are no rivers. Can we do things that we feel are lacking? Can we digitize agriculture value chains? There's so much potential in there that I think that's one of the most realized areas. So we need to work on all of that. And for me, those are the three ingredients that had been missing for us to take this further.
Thanks, Ronald. Herbert, when you look at the next decade, where do you see opportunities for partnerships? What do you think have been the shortcomings, if you may, when you look at the past decade, and what opportunity does that give?
Thank you very much. So my view, again, building on what has been spoken, would be unpacking these partnerships a little bit further. So we have been talking about collaborating. We've been talking about partnerships. What exactly do we mean? And this needs to be based on trust. So this partnership needs to go beyond whatever contracts we're going to have or whatever legal obligations that we're going to have to govern us, but there has got to be a mutual to change, because it's going to be an ecosystem, it's going to be a platform. We have the customers in common. We have got to actually think very deeply about how we do these partnerships. We've got to think about, why do I actually need this partnership? Is this the right partner that I am going to partner with? Can we have value that will be shared? How are we going to define the benefits? Are our agreements going to be very clear? There's going to be IP in this discussion. There's going to be revenue shares. Can those be very clear and transparent? Because that way, you actually build a relationship that is lasting. We should not be shy to actually terminate the contract. If it's not working, then you close up that one and start with the next person. So that really needs to come out very, very, very clear. And probably if I took it back into the organizations, and this would be whoever, so like I said earlier, I'm interested in the tripartite. If you're the MNO or the bank or the fintech, there has got to be that appreciation that we want to work as a team. So can there be some bit of structure around the collaboration or the partnerships? Take it all the way to the board and have this team that will value the partnership first before you even value your organization. So even as a bank, we set up and say, this team is responsible for making sure this collaboration works. So that team will look at that, and that will be the priority to make sure that works. Beyond, then after that, the organization. So for me, that becomes very, very key in how the success of the partnerships will be. Thank you.
Thanks, Herbert. And I'm reminded our time was eaten into by the previous one. So the quicker we can, the more we can tackle in this discussion. But Stephen, yes, tell us, when you look at the next decade, what do you see partnerships from the point of view of MTN?
Thank you very much. So, and this is something we need to look at from a global context. I think I will swing on to what Pegasus mentioned, that you need to have a global view of what is going on. So we need to have a platform mentality. We've recently, been building businesses for our own use, ecosystems for our own use, and that kind of thing. But you now move into a future where you must build a platform as an enablement for many others to come on board. There was a video you were playing just before this session started where my colleague Christopher was talking about something called Open API. Basically, how do machines speak to each other to enforce certain rules? It's basically what underlies some of the things like payments. If I pay you, how does it transfer money from this wallet to that wallet? Those are basically APIs, language of equipment speaking to each other. So we set up something called Open API 2 years ago, and it has a sandbox component to it. We've got over 100 businesses on there, fintechs on there. Have we been perfect? By all means, no. We can improve the onboarding. We can improve the KYC process because it's seen by these entities to be very heavy, So we can improve many things. However, the key thing is we must create platforms where people plug in. In fact, it's very interesting. I think 4 weeks ago, MTN has set up an entity called Genosis, which basically is a hub for APIs. There are telecoms APIs in there, there are financial APIs in there, there are health sector APIs, so that people can go into one place and plug their businesses in there in order to deliver certain things or capabilities. So that's the one. The other bit is we must solve the issues that people in this country and people in Africa face. And that is the credibility of any business, be it a fintech or any entity. You must solve for an issue that people are struggling with. This could be around efficiency, it could be around effectiveness. So I think one of the speakers spoke about transport. Yeah, we could actually digitize transport. We could actually make sure that transport payments, be it in buses, taxis, are digitized. And by that, you get other benefits, especially in this kind of period we're in. You're able to trace who it is, which route they were on, and you add value on top of that. You can actually build that into route planning to make transport more efficient and more effective. And then, and I think the key thing about that, solving problems that people face every day, is that we overall, as Director McKay pointed out, there's a bigger intention. There's efficiency, you're fostering economic development, you're improving livelihoods. And I think as private sector, many a time, we've been looked at in one lens. One lens meaning that, okay, they are profit making. But in order to make those profits, you must deliver something that is of value to the people who subscribe or who are customers, okay? So I think the other thing I want to talk about is infrastructure. So we have seen and we continue to see whatever fintechs or whatever we ride on today is around internet. So we've seen the internet cables, we've seen the 4G coverage that MNOs are trying to lay out there. We've seen them going into smartphones, trying to get people's equipment up to speed, because that's what you latch on in order to enjoy these services. So there's the whole enablement as well. So it is enablement, the platforms, and obviously improving or resolving society's issues today, meaning homegrown talent, homegrown companies have to be brought up to speed.
Yes, thank you, Stephen. To further the discussion, and I'm pressured on time, but I'd like to pick on one use case which we've been involved in as UNCDF, digitizing agriculture value chains that you mentioned. The promise we took down to the last mile was, if you embrace digital payments, eventually finance will be unlocked. Started around 2014 until today. That promise for beyond payments still hasn't happened. How do you perceive, and I'm talking to Azaire, how do you see the challenge of all the data being held within the fintech sector, you claim, being used to unlock lending to the last mile?
So,
and please keep it to a minute so that everybody can speak.
Yes, so again, one of the things that has happened for us, and in collaboration with MTN, there's been work around their agents. How do we know the viability of these agents? And there's a lot of information, like you say, about these agents. And MTN has gone ahead to say, can we develop a system, or can we have a system that allows us to give a bit of extra flow to our agents when they run out? And that has made sense to them. So as they operate, they build up a certain credibility, a certain, and for those who have been abroad, you have a credible, you have a reference of sorts based on your operations. Now, in terms of digitization of agriculture value chains, has the information we've gathered from digitizing value chains gotten any use for the farmers? And for me here, I would invite the banks. If the banks can look into that and look at all this amount of information we have and take interest on that and use it to profile the farmers and probably extend to them loan facilities, then for me that would be the answer. We have so much information over a period of time which they can look through and say, this farmer is credible, he makes million shillings every month from his milk sales, and therefore we can afford to lend him 500,000 shillings, whether in terms of short term or long term. So for me, that should be the answer then that rides on the success we've had with, again, perhaps not much success, but part of the success we've had in digitizing agriculture.
Thanks. Herbert, the fintechs claim they have gold, the data. You tell them we don't trust it. What would it take? For what partnership model would it take? What do you see happening for what you're not able to go and get yourselves being mined by somebody else, but you using it to advance lending?
That's a very interesting one. What I can say is the partnerships are actually there, and not that we don't trust the data, we actually are using that. And probably if I speak for Stanbic, one of the changes that is happening is we are looking at enabling ourselves as a platform business. And that means a lot of collaboration across many areas, of course in line with regulation, and to look at how we can get that data, and also cognizant of the Data Privacy Act, because we cannot compromise on regulation. And it's work that is in progress, and I'm very sure things are moving faster now. There's definitely going to be a lot of change in that space, especially now that a lot of work is being done. So we are cognizant of the data that is there. We are working with the guidelines that we have, and that is something that we have at the top of our list to enable for our customers.
I don't know whether, Stephen, you have anything to say about that, but if not, you could also couple that with your parting shot, because I'm told you're almost going off air.
Okay.
So, yeah.
No, I think very quickly, it's a transformation. It's a cultural transformation. Herbert has spoken about how banks would like to create platforms. We're speaking about how we would like to create platforms. But it means that there are certain things, and as Herbert says, within the law, within regulation, there are certain things we should expose in order to build these businesses. And I keep on talking about APIs. So it could be activities. How active is that wallet, that account for the month? What comes in, what goes out? That information can actually be used to, as Ronald was saying, to understand the propensity of an individual to borrow and to have the capacity to pay back. And yes, within the rural space, I think it's that holy grail where we need to understand for farmers what are those key elements of data that we should be keeping, and which reflect their ability to participate sustainably. That's to be able to borrow for inputs and then to grow their crops and get the harvest. Yeah. Now, just perhaps in conclusion, this requires that there's transformation both within our organizations and how the data is sustainably used. So there has to be some kind of framework to not only to protect the owners of this data, but to make sure that for the greater good, that we keep within the confines of regulation to spur that innovation. Yeah. So I think that's how I would put it. We just need to.
Thank you, Stephen. Unfortunately, I'm alerted that we need to cut this short because our time on air is done. I'd like to thank you all. I guess the discussion on partnerships continues, and I'd like to thank you all for the participation on this panel. Thank you. I think we are ready.